How do you view the week, Sarat? I think you've been ready and willing and able to go with the flow and the momentum and stay long. Anything happening this week, whether these are pre-shocks or whatever they might be in crypto, and whether that affects, I don't know whether you think that affects the equity markets, but it all seems related. Anything got you with like a baby toe out the door, ready to head out, or you're full speed ahead?
No, I'm not ready to head out. In fact, what I'm looking for, Joe, is opportunities to buy specific stocks that just get thrown out. For example, this week when the AT&T deal was announced, stocks like Charter and Comcast were for sale for no reason other than they were just in the same sector. So I'm looking for opportunities as we go forward where there will be money to be put to work. And also, I'm also looking at where I want to now reduce some exposure and put it into other areas that I'm going to grow. So, for example, home building stocks. I mean, they have done everything you wanted them to do since last March. And really what you're facing now is going to be tougher comps, potentially higher interest rates, and an opening of an economy. So, I think investors are doing the right thing, taking money out of areas that have done really well. We really couldn't say that a year ago other than if you were just looking at, internet cloud stocks. So the opportunities there will be for secular growth and for companies that I think will do well for the next 2 to 3 years, even if the Fed decides to come in. So, for example, an American Tower or a GoDaddy will do well. And then you also want to look at other sectors like healthcare, where I think you're going to get some more secular growth just because it's been so depressed over the last 12 months. So there will be plenty of opportunities. You just have to be patient. What we saw in the last 2 weeks, I think you're going to get more of, and especially if the economy gets a little stronger with Europe picking up, people are going to be questioning when the Fed's going to be stepping in any type of capacity, whether it's reducing bond exposure or just talking interest rates.
Yeah. So you referenced the Fed. I guess that's what I was getting at. Whether we are moving along towards more normalization for the Fed, which the slightest indication of that does seem to give agita to the market. So I guess to summarize what you're saying, you're still dancing. You're still dancing, but you're only dancing with certain partners. At this
exactly.
point.
I'm dancing in specific parts of the dance floor where I think there's going to be opportunity, and I do think we have to look for indications globally as the economies, get stronger. And Joe, you know this, we still have huge fiscal stimulus in the system and monetary. So at some point, the Fed is going to have to indicate, just as the rest of the world has, that could be that hiccup in the short term. It's not that growth's going to slow. You just have to find the right part of the dance floor.
And even in a macro sense, you don't think the S&P or even the NASDAQ, as far as valuation goes, is that excessive in terms of where interest rates are and with all the stimulus? So it's not just an accident waiting to happen, in your view.
No, but I'd be careful in the NASDAQ just because it's propped up by a lot of high growth stocks that have earnings that are projected out 10, 15 years. I think the S&P, which is pretty fairly valued, again, you got to pick your pockets there. But if rates do move up, and I'm not talking 10-year going to 4%, I'm saying 2 to 2.5%, they're so sensitive to the future cash flows that you will get some rotations and you have to be careful. So I think this is that time, but hey, if you've made a lot of money in some of these really high flying stocks, it's okay to take some profits and redeploy in other areas.
Yeah. All right. So you can have some speculation in crypto and Dogecoin. It doesn't necessarily translate into overall the equity markets in terms of.
Right. I think it's on those two, you have to be careful where investors have leverage. In the SPAC market, I think, which is also speculative. So there are some of those areas where, you're looking at some extreme valuations and really there are no earnings underneath them. Some stocks that are trading at price to sales over 10. So you need to be careful.
Shepard Smith here. Thanks for watching CNBC on YouTube.